Welcome to lesson number 9 of SBA University, the perfect business acquisition application. Now, I say that kind of jokingly because you do not need a perfect application to get approved for an SBA loan. But the purpose of this lesson is just to let you know what a perfect application would look and sound like. And the idea is that you will try to get as close as possible to the things that make an application perfect. The idea that it has to be approved because it checks all the boxes. In this lesson, I'm going to be covering the 5 categories that I think if you're able to check all 5 of those boxes, your success rate will be maybe not 100%, but pretty close. The first thing, and this is obvious, is cash flow, right? The deal has to cash flow. The business has to show on a historical basis that it can support the debt that you're about to take on to buy the business. Pretty straightforward. But it's a little bit more than that. There's trend, right? We typically look at a 3-year historical financial look back along with the current year-to-date financials. What we want to see is trends. So what is the perfect trend? Year-over-year growth in revenue and profitability. Most recent is the most important, right? A lot of times I see business owners put that for sale sign up and they take their foot off the gas. And so when you look at maybe the last 2 completed years, there might be a little bit of a drop in revenue, a little bit of a drop in profitability. And those are things you want to look out for, right? Because that's essentially the business that you're buying. You're not buying the business from 2-3 years ago. You're buying the business as it sits today. So cash flow and trends, revenue, profitability. You want to make sure that those things are increasing year over year. Again, doesn't have to do that to be approved. What you want to avoid is the steep drop off in the most recent year. The second thing that can make an application extremely strong is just your management experience, your background, right? Now, the obvious is the direct industry experience. You've been doing this thing for 10 years and now you're about to buy a business that allow you to keep doing it, but in ownership capacity. That's the ideal scenario. Direct industry experience that demonstrates that you know this industry, you know the operations, you just know how it works. Makes sense, right? Now, do you need to have direct industry experience? Not necessarily, but we like to have what you call applicable management experience. It's important to know, have you ever managed a sales team? Have you ever had to prepare the business financials? Do you know what a profit and loss statement is? Do you know what a balance sheet is? Have you had to set budgets? Have you helped grow a business in the past? Maybe you've had ownership experience in the past, just maybe not in this industry. Again, the idea being for the perfect application is that you'll have direct industry experience. Not necessary, you have applicable management experience. One thing you want to avoid is stepping into an industry that is extremely specialized, that you have no background in. Just from a risk standpoint, it's going to make a lender a bit nervous to know whether or not you can handle that new challenge. The third thing, and again, it's obvious, is credit, right? Perfect credit score, get your 800s plus. Don't need to be there, but a credit team is going to look at that as not only a credit score, but also a reflection of character, right? What have you shown historically in terms of paying your bills on time? Because essentially an SBA loan's a bill, right? You're going to have to pay it on a monthly basis. Do you have any recent late pays? Those are all things that are going to be looked at. A clean credit report, free of any late pays, free of any defaults is, of course, the perfect scenario. Again, not saying you need to have it there, but when talking about the perfect application, those are the type of things that we're going to be looking for that can impact the ability to be approved for a loan. The fourth thing is equity injection. Now, obviously, the SBA requires 10% of the total project costs. So what is perfect? You could say 10% perfect. 20% might be even better. You got to think the more you put down, the lower the loan, right? The stronger the cash flow is going to be. Equity injection is important. Some lenders will even let you get down to 5%. Below that, again, talk to the lender, see what their comfort level is. Kind of going back to that experience, the more direct industry experience you have, the potential for maybe a lower equity injection will be there. And that's, of course, assuming that the seller financing will help bridge that gap between whatever you're putting down to get it up to that 10% requirement. But again, and for the purpose of this perfect application, consider at least 10%, but of course, 20% would be nice as well. The last thing is collateral. And with these SBA 7A business acquisition loans, typically there's not a lot of collateral. And that's fine. Assuming all the other items are strong, we can get past the lack of collateral, but we are talking about the perfect application. So let's talk collateral. So obviously the business assets, right? Does the business come with commercial real estate? Does it have valuable equipment that can have liens put against it? Are there vehicles as well that you're taking that can be collateral? And then you personally, the SBA does require to look at the borrower's personal residence or investment properties to see if there's sufficient equity to be taken as collateral. While most people aren't a huge fan of pledging a home or a rental property or vacation home, just know that it does strengthen the deal from a collateral standpoint. So while collateral can be mitigated with the SBA guarantee, just know that having collateral as part of the deal will only help strengthen it. To sum it up, even though this is the lesson about a perfect application, just know you don't have to have the perfect application, be the perfect buyer, but a lot of these things are going to be important to your success of being approved. So keep in mind, strong business cash flow, strong trends, revenue, profitability, your experience, your background, what that brings to the table, your credit, your profile from a personal credit standpoint is important. A strong equity injection can help a deal. Obviously, knowing that you have good skin in the game. A lot of lenders like the idea of you putting some money in, and not only just putting money in, but having some good, strong post-injection liquidity as well. Nobody's going to like you emptying your bank account to buy a business. And the last piece is collateral. Does the business have collateral? Do you have any personal collateral that you can pledge in the form of property? These are all things that all work together to make the perfect application. I hope you found this lesson helpful. Until next time, class dismissed. Thank you for watching this episode of SBA University. Hopefully you found this episode helpful. If you need to get a hold of me directly, I'll leave my email address down in the description. Be on the lookout as I will be releasing new lessons every week to help you in your SBA journey. Thanks.